In this video, we're going to dive into what a fair value gap is, or an imbalanced candle. As you see on the picture here, I have marked out 3 consecutive candles. So a sequence of 3 candles, bullish candles, bearish candles. Fair value gap is when the wick of each candle, of the first candle and of the third candle, don't overlap each other. So as you see, there's a gap between this wick of the first candle and this wick of the third candle, which means that the candle in the middle, the second candle, is imbalanced. There's a gap here. So I'm gonna show this on a real chart to give a couple of examples. All right, so here we got the XAU USD gold chart, and we can directly spot a couple of fair value gaps. So let's focus on the sequence of these 3 candles here. You got candle 1 right here, candle 2, and candle 3. As you see here, the wick from the first candle and the wick from the third candle, they don't overlap, and therefore leaving a gap in between called a fair value gap. If we look at these candles here, for example, you see this wick is overlapping this wick. Therefore, this candle is balanced. And it's the same thing right here. If you look at this wick, it's overlapping this wick. Therefore, the candle in the middle is balanced. If you look at this candle here, and then this candle and this candle here, then you see that there's a gap from this wick till this wick. We have an imbalanced candle and therefore a fair value gap in between here. So fair value gap is the imbalance in between the wick of the first candle and the third candle, which makes the middle candle be imbalanced and therefore leaves a fair value gap behind. And that, ladies and gentlemen, is the fair value gap. In reality, what it is, it's an imbalanced candle, which means there are a lot of orders laying there unfilled and needs to be filled. So therefore, market has tendency to draw back, to magnetize back to that zone to fill orders, to grab liquidity.